All right, Midali, thanks for getting us those corporate headlines there. Let's also welcome in Phani Sekhar Fund Manager for PMS at Karvy Stock Broking, who's joining in right in our studios. Phani, morning. Thanks for taking the time out. Well, if you look at the way the market performance has been panning out, yesterday the last 30 minute spike was something that everyone's been taking a note of. How are you reading the markets? In the pre-open, it's up 0.2%. Are we slated for some bit of recovery, or it's all depends on what the Fed has to say?
Well, we'll know what the Fed has to say by tomorrow morning. But I guess during the day, I guess the market will take a more benign view that the Fed might not hike interest rates. So to that extent, I guess markets might be slightly positive today.
You were saying, Phani, that you actually feel that the correction was long overdue. Do you see a further downside?
Well, from a price perspective, it may not correct beyond 8,500,
right.
But from a time perspective, it might stay here for some more time.
All right, we've got about 30 seconds left to go for markets to open. Priyanka, as you said, just slightly higher in the pre-open so far.
That's right. We're just seeing markets just barely hold on to some bit of green in the pre-open is what we're picking up. Just pull up the benchmarks for you once as far as what the pre-opens indicating out there. Sensex up just 0.1%, Nifty 0.2% higher. Remember, yesterday, last 30 minutes, markets seen quite a bit of a sharp spike is what we noticed. But talk about trade today, you're keeping your eyes out on the metal pack. Shekar is going to be the big one that everyone's going to be focusing on the back of the fact that you've got that revocation of the iron ore ban coming in Goa. 47, 48 points on the index at least is what we're seeing. Shekar is the one to watch out for, and that one's up just 4.3, 4.4%. Remember, globally, you've got a little bit of a surplus scenario coming in when we talk about iron ore, and China hasn't really been the big buyer in the last few months as well. So that all that probably weighing out a little bit as well. 3.6% higher here on the counter. Infi and Wipro have been providing some support. L&T and BHEL are some of the other movers. TCS, Maruti, Dr. Reddy's and BHEL are a couple of the other counters in positive, but beyond that, it's pretty soft. M&M, RIL, ONGC and Tata Motors all seeing muted performance today. Bharti and ICICI Bank also seeing a little bit of a cut. Let's get the Nifty going. Mention that one for you. Pretty flat on the Nifty right now. 27 gaining, 23 stocks losing out. Stocks that are on the move. Shekar and JSPL are the two big outperformers from the metal pack. HUL and GAIL are also marginally in positive, while Tata Motors, Tata Power, ICICI Bank and DLF are a couple of the weaker names. So that's the way it's playing out. It's extremely quiet here. 3 to 4 points higher now on the index, and metal counters once again in focus on the back of news developments here.
Right. We've got Bhushan Steel higher on the news of the debt restructuring. So that's one stock in the mid-cap space. Otherwise, mid-caps are pretty quiet as well right now. Marginal moves coming in on certain counters so far. Okay, let's just go back to our conversation with Phani. Phani, no clear direction really emerging as of now. Everyone seems to be on standby as we await what the Fed says. But let's talk about some of the pockets of the market that you possibly find interesting. Banking and financials, that's one. Even yesterday we saw banks come back to the fore. What's your view going ahead? How would you advise a strategy in that entire bag?
Well, the logic behind choosing a financial services or for that matter an IT and pharma is now you have reached a point in the market where re-rating of valuations is not really an option. What you got to look at is whether earnings will flow through as per assumptions. And by all indications, probably, as one was expecting recovery during the second half of 2015, that got pushed to first half of 2016, and now it seems to have been pushed to second half of 2016. So market seems to be more or less prepared for earnings to come back by October quarter 2016, FY16. However, if the earnings do get pushed a little more back, then you might see the market sulking a little bit, and to that extent investors now need to focus on the hope trade versus the visibility trade. Now you have visibility in say pockets like private banks, IT, pharma, and there is a lot of hope in the recovery of economy, which might lead to high beta sectors outperforming. Now that's a trade that has already played out, but since earnings seem to be a little bit hazy, I guess that's the kind of trade that you need to avoid and shift to the visibility trade, which is the private banks, IT and pharma.
All right, so that's as far as some of the banking and the way the market should be viewed in the current environment. But what about the metal pack? I mean, that's really been the surprise factor, right? I mean, JSPL stocks holding on to 3% gains, but it's got a massive overhang in regard to its coal blocks. You've got Shekar some respite, but again, in the international context of things, is the way prices have been panning out, what we've been tracking in terms of trends. You had some quote coming in from Australia this morning as well as to how they've been looking at the iron ore outlook. So just your reading on these two developments, one JSPL and Sesa Sterlite.
Well, two completely different cases. As far as the JSPL case is concerned, one always expected some rearguard action because those bits seemed a little out of place. Okay. So we'll await the report. What happens today? As far as Sesa is concerned and the event of Goa being able to export iron ore, I think the Goa iron ore is never, it's not been of very high quality, and to that extent, it never commands a premium in the international market. Moreover, the iron ore pricing has really collapsed. Maybe we are just 2 years too late. So even the demand can't be absorbed in the domestic market as well, because there isn't much activity out here. However, if things improve, as all of us have been expecting for the last 1 year, then I think it might help some of the domestic steel companies, especially the long products.
Okay. Fine, so that's the metal space for you at this time. Let's just take a look at what else is moving today. We've got metals up marginally, pharma, as Phani was mentioning, too, and IT, so that entire theme, Phani. So let me just go into that in a little bit more detail. Pharma, for instance, we've seen a resurgence not just in the heavyweights but also in the mid-cap counters. There is an argument that says a lot of them are already fairly expensive. Would you agree with that?
Well, they are expensive, and they're getting more expensive with each passing day. Now, to play devil's advocate here, some of the companies out there seem to be sitting on pretty exciting prospects. Companies like Natco Pharma or Aurobindo. Disclosure here that we hold Aurobindo in our portfolios. This is not to suggest that one should go ahead and buy, but in a market which is desperately looking for activity on the corporate earnings front, whenever you have these pretty small caps and mid caps which seem to be at the cusp of interesting developments over the next 1 or 2 years, it is natural for them to get re-rated, and the market always gets excited. You have seen that happen in pharma, FMCG for the last 5 years, not just this year.
Okay.
Alright, so that's as far as the pharma pack is concerned. It's clearly been the big outperformer in the last couple of weeks and probably even months for that matter, is what we're seeing. Alright, but the big development clearly has been surrounding what's been happening as far as Sesa Sterlite is concerned. That stock's up almost 3%, and the big factor here is that in a major boost for the likes of Sesa Sterlite, the centre has lifted the suspension of environmental clearances on 72 mines in Goa. Remember, the move paves the way for resumption of iron ore mining in Goa. In fact, we're now joined by PK Mukherjee, former managing director of Sesa Sterlite, to discuss this further. Sir, thank you so much for taking this call this morning. This is probably a big factor that you've argued in the past. We've spoken to you as well. This is something that you fought for. You were asking for it as well. What's your reaction here now finally that we've got that mining resumed in Goa?
Yeah, this is definitely one positive step after a long time. But there are a lot of other approvals also has to come. Like IBM has to approve the mining scheme. Then State Pollution Control Board has to give the approval under Water Act and Air Act. Then there are various other ground level activities has to happen before the mining actually can start.
So, sir, basically what you're saying is it's not going to be an easy step or an easy process for them to actually just go ahead and resume mining. It's going to be a long drawn out process?
You see, long short is depending on various people's perception. But I think that my perception is that not before the September, October it can start. That is my feeling. And if it can start, very good. It will be a good thing for the Goa.
All right. In terms of how you could see this translate into financial benefits, give us an idea of the kind of what Sesa could stand to gain here in terms of the potential from this mining.
See, considering the export duty is still there, and there is additional 10% for the Goa some development fund which Supreme Court has prescribed. So 40% cut on the revenue, and which is the price is today at the rock bottom. I don't find much of economics left in the mining business, and unless the companies are going for a drastic cost reduction, which is, to my mind, is very, very difficult. And second thing is that even if there is this thing, market is not just there waiting for accepting the Goa over, because Goa has lost his market. So it will be very difficult to gain back the market share.
Yeah, and sir, and you rightly said that fact the way the global economics have been panning out, you've got quite a bit of commentary in the last few days as well, talking about the outlook as far as iron ore price is concerned. Some of the global developers, some of the global miners rather, BHP, Rio also haven't been sounding that optimistic. Just your thought, Mr. Mukherjee, out here when we talk about the way the pricing scenario is really likely to shape up from here, because on one hand, the biggest factor here, China hasn't really been seeing any bit of demand or hasn't really ramped up any bit of the iron ore consumption. So just your thoughts here in terms of how this event is likely to play out on pricing.
The Chinese iron ore consumption is not likely to go up significantly at all. Actually, it is more or less static now. But what has happened that these big three, or rather big four now, including FMG, they have increased their capacity like anything, and they are all lowest cost producers. So they are dumping the material, they are exporting the iron ore to the Chinese market, and even Chinese productions are getting stopped. There are 30 to 40% mines have stopped already in China. So it is very difficult to compete with their cost, and more importantly, in India we have got regulatory cost which is significant.
All right, Mr. Mukherjee, thanks so much for joining us with that insight into what this could mean for SESA. The stock, though, is still up 3%, cooled off ever so slightly, though, as of now.
All right, so that's as far as SESA Sterlite is concerned. Important comment there coming in from Mr. Mukherjee, former managing director of SESA Sterlite, saying that in the current environment, the business dynamics of the iron ore segment or the iron ore mining itself look a little difficult, is what we're hearing from him. All right, stock though up almost 3%, but it's cooled off from the day's highest point, is what we're seeing. Phani, what's the focus then in this kind of a scenario? Because again, it's somewhat of a similar situation where the markets have been unable to hold on to that rally, unable to hold on to the momentum. Is there anything that you would look at buying at lower levels, any sector, any space that looks attractive?
Well, broadly the three sectors that I mentioned, private banks, IT and pharma, more so tacking up on NBFCs and private banks, because this is a space that will still give you reasonably good earnings and will also bounce back that much more faster.
So you continue to buy on dips?
Continue to buy on dips. I don't see any cause for alarm here.
All right, Phani, thanks so much for joining us on the show today. A muted start to trade this morning. As of now, Nifty in fact has just slipped into the red.
That's right, just seeing marginal cuts there now, 0.2% higher or lower is what we're seeing as far as the benchmarks are concerned, and clearly they've been unable to hold on at high levels is what we're witnessing right now. A quick mention on the counters, JSPL and SESA Sterlite still holding steady, but among the weaker names you've got Tata Motors and M&M both seeing a little bit of a cut. Tata Motors have actually had a decent run in the last few days, so it's cooling off. M&M on the back of some analyst and brokerage comments that we've been picking on this morning is also down nearly 1.2%.
This is despite the company saying the worst is over, but still some amount of negative sentiment building up there. That's all from us on Street Smart this morning. Up next in business with Nanda.